All right, this one is coming in from Hina Arora, who's writing to us from Gurgaon, saying that is invested in IPO of Prudent Corporate Advisory Services, got around 50 shares on allotment, wants to know whether should sell or wait with this counter, and also if wait, then what sort of a time frame should one look at? What's your take on this one, Avinash? Do you track this one? Is a very recently listed counter. Does it make sense to make a hasty move and sell it off, or do you think it's the right time? But
No, I think Cheryl, this company is a very well-managed company from Gujarat, and I think like Anand Rathi, they are also having a lot of advisory and wealth management business plus the mutual fund distribution business. My sense is, since the investor has just applied, and I think the stock has not given a very decent upside from the public issue time, I would suggest that he should hold on at least for the next 12 to 15 months, because once the company starts reporting quarterly numbers, starts giving management commentaries on the business, at that point of time you could see a lot of interest in this company. It's a well managed company, but I think given the fact that very little data is there in public as of now, I would believe that it's better to hold rather than exiting at this level, because my sense is that hopefully if the markets improve from here on, mostly the fee based income would continue to grow, and definitely long term prospects are good. So continue to hold on and wait for at least next 12 to 15 months to get a decent risk reward.
The next query we have coming in is on Mahindra and Mahindra, and Kunal, this one is for you. So the query is that Neha has bought Mahindra and Mahindra for 810 rupees per share. Should she sell now, wait for higher profits, short term view 3 to 6 months?
I would suggest to hold on. I think the stock is going through a turnaround phase. It's already broken a 52-week high as well as a lifetime high above the 1,000 mark. And it's the first time I think we've seen Mahindra and Mahindra crossing that 4-digit levels. Over the last 1 month, I think it's trying to spend a lot of time at this 1,000-odd mark for itself. So maybe for the next 1 month, you could probably expect the stock to remain into a range. But typically, we've seen that whenever stock makes a fresh 52-week high, it tends to rally at least 10 to 15% more than the previous major high for itself. So if that's the case, then we can expect Mahindra and Mahindra to cross even levels of 1100, 1150 over the next 2 to 3 months. I would suggest a hold.
all right, this one is coming from Jayaraman Vaidyanathan, who's writing to us from Hyderabad, and he has Aditya Birla Sun Life AMC at the price of around 712 rupees per share. He's looking to stay invested for the period of the next 3 years, but he's saying that should he look to book loss or exit or hold or average at these levels? How do you see the stock in comparison with peers? A lot of questions for you, Avinash, on this one. Aditya Birla Sun Life. No doubt that Jayaraman has a view of 3 years, but still now I think given the market condition is getting a little perturbed, wants to know what should he do.
I think, Cheryl, if you look at the mutual fund business, one big positive for the mutual fund business is that they don't require capital frequently, and it's a very high ROE generating business. Now, there are many investors who got stuck up in Aditya Birla Sun Life AMC after the public issue, but I would suggest, if the investor has got the next at least 2 years plus time frame, then I think he should use the opportunity to accumulate a little more and average a little more at the current level. The stock is definitely trading at extremely attractive valuations, and I think considering the fact that SIPs are now pretty strong and stabilized in the market, plus Aditya Birla Life Sun AMC is one of the larger players amongst the top 3 players in the industry, I would not be surprised that you could see a strong kind of growth for FY23 and 24. So keep the patience with you, and I think definitely you should be able to get your price, but do average at the current level, which will actually reduce your average cost and get you a better risk reward in the next say 2 years. So my advice would be not to sell in panic and definitely hang on to this, but do average a little quantity and we keep a time frame of at least minimum 15 to 18 months to get that a decent kind of risk reward.
Now the next query is coming in for you. It's on PVR futures. Now Swayam Chopra wants to know, they're holding PVR futures as 826 rupees. What should they be doing? What's your view on PVR futures?
Wow, I think if it's 826 rupees...
I'm sorry, it's 1,826, my bad. I forgot the one, I'm sorry about that.
I was actually trying to calculate the rollover cost. I mean, since he is assuming he's carrying from 800 rupees. Now, on a serious note, I think PVR, is a very interesting chart. The stock has managed to stood the time over the last 3, 5, 6 months of this, market pain. It's remained, at this range of 1,700, 1,850, which means that whenever the market gets into a phase of a rally or a bounce, PVR could be one of the few stocks which can, cover up this patch of outperformance and then break out on the upside. We've seen that, every new bull market or a trend or an uptrend or a rally leads to emergence of new stocks. So I think PVR could be actually one of the stock in that category. If you've bought at 1826 levels, the stock is currently at the same price, approximately 1821, 22 on futures. I would suggest a hold, and assuming if you have a time span of at least another, 2 to 3 weeks, so rolling it over to July expiry, I would expect PVR to head towards at least 1880, 1885, if not more.
All right, this next question is also for you, Kunal. This one has come from Shriya, writing to us from Kerala, saying that she's bought Bajaj Auto June of 4,000 call at around 6.48. Wants to know what should she do with this one.
I would suggest an exit. I think Bajaj Auto is far off from this, level of 4,000 odd. There's been a lot of discussion on this, buyback, etc., going on for the stock, which has kept the stock price under check. So I think the best trade for Bajaj Auto, assuming if you're looking to time this options, is to wait for the stock to break out of that 4,000 levels and then try and take an at the money or slightly out of the money call option. That would be a better trade in terms of timing rather than anticipating or hoping that the stock would come back towards 4,000.
Avinash, the next query is coming in from Sukanya, and this one is on Dabur India. Wants to know whether it's a good time to enter Dabur India, current price, mid to long term holding time she has.
If the investor has got at least the next 1 to 2 years, see, Dabur is one company which has insulated some of the inflationary cost pressures, and most importantly, we believe that in the coming year, hopefully, if the monsoon is good and if there is complete normalcy in the business, then volume growth will be pretty strong. I would suggest that if the investor wants to buy, possibly she can buy possibly in small installments, not in one lump sum amount, because considering the markets are volatile, she could get possibly a better kind of investment opportunity if she averages a cost in 3 to 4 installments. But definitely on a business side, compared to other FMCG majors, I would believe Dabur definitely has its positioning well placed. Its geographical mix and product bouquet is far more diversified, and which gives it a lot of resilience, in this kind of market. So definitely, if one were to look at the next 1.5 to 2 years, this is definitely a good portfolio stock to accumulate.
This next one is also for you, Kunal, once more, and this one is coming in from Denny Matthew. He's writing to us from UK. Thank you so much, Denny, for actually tuning in at this hour, if you are from actually tuning in from UK for us. He's asking about Lupin call option 620 at 21. He has 2 lots and his June expiry.
I would suggest an avoid or an exit. If you've bought already, then I would suggest an exit. I'm not sure what's the exact price of the call option, because Lupin has been one of the few charts on the pharma side which has been a clear underperformer. Now, remember that we are into a market where the uptrend is very shaky. It lasts for a very short duration of time, and then it's led by more large cap names which rally up higher. So you would not want to get stuck into a mid cap, into a stock which has been a big underperformer, and then buy an option hoping that the stock would get into a resurrection phase. So that's too much to ask for. That generally, the resurrection part generally happens when there is a new bull market which shapes up into stock prices, and even in that case, they are not the first ones which tend to rally up higher. So in all of those criterias, I don't expect Lupin to stand out to be a strong outperformer. I would suggest an exit on the stock.
Avinash, the next query is coming in on Lao Pala. Now, Debidas has bought Lao Pala at 284 rupees per share. Should they be looking to sell or average? And if they have to average, at what price?
No, I think Lao Pala definitely is in a very niche category, and I think if one were to look at the profit margins of this company, they have been consistently high because of the premiumization of their product bouquet. See, if the investor has a medium to long-term horizon, then I think this company has a very bright future, considering the fact that this is an upmarket product with very good EBITDA margins. As far as the averaging is concerned, I think the current level also looks pretty good, but the time frame needs to be at least 1 to 2 years. I think earnings recovery will definitely come in because the company has recently, commissioned an expansion. And I think we could definitely see higher volumes as well as incremental top line growth over the next, say, 2 years. So even at the current levels, one can average, but time frame needs to be at least 18 months plus, which should definitely give a better risk reward, considering the fact that this is a small but niche business and growing quite steadily.
All right, this next one is coming from S. Gopalakrishnan, who's writing to us from Chennai, and he's asking a query which, Kunal, to be honest, we've had a lot of our viewers ask day after day, and that being that is it a good idea to do staggered buying in Tata Steel and Hindalco for a period of 1 to 2 years? What's your take on this one? Because given what's happening with the metal sector, I'm sure everyone must be wanting to take a bite of it.
So yeah, I think that makes sense, and also I think on the other hand, the steep fall in the prices in the last 3-4 months, I think has also brought maybe some anticipation that these stocks have come back to a cheap or a value zone for themselves. But then my sense on metal stocks, which I reiterated in the morning as well, is that there is a short-term correction which is going on to these names, and the correction is very vicious into these stocks. Hindalco has corrected 50% in the last 4 months. Vedanta has corrected 50% in the last 2 months, and that's a very sharp kind of a correction for these stocks. This generally indicates that there could be more pain ahead from a short-term view. So possibly these stocks can correct by another 5% to 10% in a span of the next few weeks or over the next 1 odd month for themselves. But then, because of the sharp correction in the short-term charts, the indicators have come back into oversold territory, which indicates that possibly for the next 3 months, 6 months or 1 year plus kind of a time frame, the probability of getting returns of maybe 15%, 20% higher from current levels is very, very high. So as and how the stock keeps on falling, the probability would keep on increasing that the stock would give positive returns in that kind of a time span. So if your time frame is 1 year plus, then I would believe you can look to start buying at current levels, but then look to add on another 10% lower from current levels for these names.
The next query we have is coming in on Prical. Now, Sriram from Chennai wants to know the fundamental view on this stock, Avinash. Is it a good buy? What is the view overall on the stock? Hold period is 4 to 5 years, so long-term view.
I think definitely Prical should do well, considering the fact that it's a very dominant two-wheeler ancillary player in the two-wheeler as well as the passenger car space. More importantly, what we saw was in the fourth quarter, margin improvement was quite significant, and the stock obviously moved up also significantly post the Q4 numbers. And going forward, the management seems pretty confident that both the passenger car and the two-wheeler business, the content per vehicle will offer a bigger opportunity for a player like Prical. I think a 4 to 5 year view, Vinny, is extremely, a big time frame. But even if the investor keeps a 18 to 24 month horizon, at least the next 1 to 2 years, I think definitely he should be able to get a decent risk reward. Auto ancillaries are definitely now in the, in the limelight, considering in the automotive sector there are significant green shoots visible. The two-wheeler sector has yet not taken off, but I would believe that possibly after the monsoon this year, we could see some sort of a good demand revival in the two-wheeler space, and that obviously would have a significant rub-off on a player like Prical. So continue to hold on, and I think keep a time frame of at least 18 to 24 months.
Right, that's the take coming in on Prical. But let's move on, and actually let's slip into a break on this edition of Buy Now, Sell Now. But when we come back, we will be coming back with your query. So viewers, don't go anywhere. Stay tuned.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going with your stock queries. Kunal, the next query we have coming in is on Nifty as well as Bank Nifty. Sagar has bought 15,400 call options of Nifty and the pricing, and as well as for Bank Nifty, it's a 33,000 call option and a 33,500 call option. Given the expiry today, what should one be doing? What can they be expecting now?
So I think they can hold on 15,400 call option, which means he's. I think the viewer is standing to be deep in the profits, and I'm not sure what's the buy price of the option. But then, assuming if it's bought, maybe start of the day or maybe yesterday, then I think the profits could be quite strong. So I would suggest to hold on both of these options.
Okay, this one is coming in from Bal Krishna. He's writing to us from Bangalore, and he's planning to invest about 10,000 rupees in Trident. Does it make sense, Avinash?
Cheryl, I think this is a mid-cap stock which is into textiles, especially terry towels and paper. I would suggest, if the investor has 10,000 rupees to invest, I think he needs to keep a long-term view, and I think largely it is better that he focuses more on the large-cap companies. Although Trident has shown a very strong, earnings trajectory, one should remember that, in mid-cap stocks, the alpha is either on the upside or on the downside, and the volatility is also very high. So he can definitely invest in Trident if he has got a medium to long-term view. But my suggestion is that please don't ignore the large-cap stocks currently also, because the market has offered a very good opportunity to enter large-cap names like Mahindra & Mahindra, or maybe something like a L&T, which are more stable names and which can give him a decent risk reward with a maximum protection of his capital. So my suggestion would be that he should cover up both large-cap and mid-caps in his portfolio.
Kunal, the next query is on Federal Bank. Rancho Gupta wants to know whether it's a good buy, Federal Bank, for a 2-year hold period.
Well, Federal Bank has been one of the few private sector banks which has not moved. I think 110, 120 has been the big resistance point for Federal Bank. So, risk reward wise at 85, 87, it could turn out to be a good buy. You can expect the stock to come back towards 110, 120. But then only above a breakout above that 120 mark is where I believe the prospects would improve significantly for Federal Bank on a longer term play. So price-wise, yes, you can look to buy, but then whether the stock and when the stock would break out that 120 mark remains to be a big question. So I would suggest that have a view in which you can probably look out for targets closer to 110, 120, and if data points improve, if fundamentals etc. improve for Federal Bank, and if the stock breaks past about 120 mark, is where you can look to trail your stop losses to cost at that point of time, and then look to hold on to it for at least in the couple of years.
Okay, this one is from Prasad Reddy. He's writing to us from Hyderabad. He's saying that he has 500 shares of Reliance Industries purchased at 2,200 rupees per share. And Kunal, he wants to know whether he should add some more, or should he wait, or should he sell some quantity?
See, I would suggest to maybe book out some profits over here. Now, I understand that Reliance has done exceptionally well, but that was on the back of crude oil prices, also staying above that $120–$125 per barrel. Now with the crude oil prices correcting, Reliance Industries as well has started to get into a correction phase. Energy index, across the globe has started to see some unwinding of positions, and I think that could also be one of the reasons why Reliance Industries has started to underperform the overall benchmark indices. So I think we are getting into a phase where if crude oil prices gets into a further correction phase, I think even Reliance Industries can get into a mild consolidation / correction. So if you've bought at much lower levels of 2,200, you're sitting in with good profits. I would suggest to book out at least partial profits, if not full profits at current levels.
Okay. Avinash, coming to you, we have the next query coming in from Raja. Now, this one is on Motherson Sumi. Now, they're holding Motherson Sumi. They're looking to switch. If they're looking to switch, should they be looking at Sterling Tools or Suprajit Engineering? Long-term view, which one would you be suggesting?
No, I think my guess is Suprajit Engineering, which is a very large player in the cable space, especially for two-wheelers. I think that would be a better bet. The company's balance sheet, the company's cash flow, and obviously the growth prospects seem to be a lot better if one were to compare it with Sterling Tools. Sterling Tools is a small player in the fastener space, but overall, I think if the investor is looking over the next 12 to 18 months as a switch, then I think Suprajit Engineering would definitely present a better opportunity. It's a market leader in its product category, and our sense is that next year should be definitely a lot better compared to last year.
Okay, this one is coming in from Raghu. He's writing to us from Bangalore. He's holding City Union Bank, about 1,093 odd shares at purchase price of around 179. He wants to know whether it makes sense now for him to move to ICICI Bank or HDFC Bank for the longer term. This is exactly what we spoke in our lens. But what should Raghu do? Avinash, do you think makes sense to move out of City Union Bank to either of these counters?
Yeah, I think from a longer term perspective, the larger banks always will present a better opportunity for growth. Now with the credit cycle getting back into double digits, I think the banks with the larger balance sheets and with a more diversified business income would benefit. So I would suggest, that if he has a 2-year view, then I think he should definitely look at ICICI Bank, considering the fact that now the bank is all strongly positioned for very strong credit growth. And obviously, if the economy grows by 7 to 8%, the banks are going to be the key beneficiaries, especially the larger banks. So ICICI Bank would be a better choice, provided he's got a 2-year view, because, the stock has definitely moved up, but it is still available at decent valuations, and where the risk reward is definitely good from a long-term point of view.
The next query we have coming in is on MRPL. Now, Vivek has bought 1,000 shares of MRPL at 95 rupees per share. Is it good to hold them for a long term, Kunal?
I would suggest an exit on MRPL. As I explained earlier, that possibly many of these petroleum linked stocks which had done exceptionally well in the last 2 or 3 months, same was the case with MRPL and Chennai Petro, etc. These stocks had a fantastic uptrend, and now they're getting into a mean reversion phase. Possibly these stocks can correct much more from current levels, even if there's a mean reversion completion which happens. So possibly MRPL can come back towards levels of 65, 67, if the crude oil prices also drop further from current levels. So I think looking at your existing buy price, I would suggest an exit at current levels.
Okay, Kunal, a tricky one for you then. This one is coming from Sudha. She wants to know which one is a better stock. Is it Amber Enterprises, is it Electra Green, or is it EID Parry? She is looking for a time frame of about 6 months to 1 year. All of them from totally different sectors. Which one do you think is the best pick? But
so tough one, frankly, Cheryl, because Amber Enterprises, I think, has gone through a very sharp correction. Electra Green has been one stock which I think has remained more sideways, now trading at I think 580 odd rupees for itself. So if I have to pick and choose, I would probably go with Electra Green at current levels of 580, 585, because of the fact that the stock has not gone into a sharp correction, at least in the last 1 or 2 months. just about compared to Amber Enterprises. So I think that would be a better relative outperformer. Even if you're looking at it from a short-term play, you can expect the stock to come back towards, say, 650, 670 levels.
The next query we have is on the sugar space. Now, this is Balrampur Chini as well as Dwarikesh Sugar. And Avinash, Vishal from Dubai is sending us a query that is it a good time to look at any of these stocks for a long-term perspective, or should we wait for a further correction?
I think from the sugar space, we have already seen a significant correction happening. Basically, market has been slightly disappointed because of the export quota for sugar companies. But I think the bigger trigger for these sugar companies is going to be from the ethanol opportunity, which I believe is going to be a very large opportunity. The current supplies are around 450 crore liters of ethanol. And whereas the demand over the next 2 to 3 years is going to be 1,000 crore liters. So I think, larger players like Balrampur Chini, Dampur Sugar, or even companies which are, making molasses from grains, something like a PCL Industries, which just recently announced today the commissioning of its West Bengal new distillery. I would believe that these are very good choices provided one has a 18-month view, because ethanol is going to be a product which is going to be in big demand. The government has also increased the blending rate from 10% to 20% by FY 25-26. So I think the the tailwinds are very strong. I think if the investor wants, he can even buy at current levels, provided the time frame is at least 18 months.
Okay, this is from Ravi Chandran. He's writing to us from UAE. He's saying that he's purchased 1,300 shares of JM Financial at a price of 76 rupees per share. He's asking, should I hold this for a target price of around 120 rupees per share, or he's saying that he can hold on for the next 1 to 2 years. So Kunal, he wants to know, should he buy more to average, and would it reach a target of around 120?
I think 120 could probably be a bit of a far cry for JM Financial, looking at the charts in the last 1 year for JM Financial. So the stock has gone through a drag kind of a mode for itself. I would suggest that if you're looking to switch, a better option could be actually Angel One. I think that stock has done pretty well for itself, and we've seen the stock getting into a high correlation with respect to the overall market as well. So in case if the market also starts to get into a trending phase, I think there's a higher chance that Angel One can stand to outperform compared to JM Financial.
Avinash, the next query we have is on Tanfac Industries. Now, Raja Gopalan wants to know whether it's a good time to buy this stock for a long-term view. They're ready to hold it for 2 to 3 years.
See, I think my guess is, I think this is a company which is an ancillary player to the aluminum sector. And I think all said and done, I think I would believe that, now the kind of headwinds which are prevalent in the aluminum sector are slightly challenging. In fact, globally, Alcoa has also said that numbers in the coming quarters could be under pressure. And obviously, in the Indian market, we have seen a lot of, downside for aluminum majors, especially if you consider Hindalco. So I would suggest that, it would be better if they wait for some time, because such kind of ancillary companies which are large players which supply to the aluminum industry could also see a little letdown if earnings don't catch up. So I would believe that please hold on for some time, provided, the view is longer term, but possibly after the first quarter of FY23, one could get a better sense on the kind of outlook and the growth momentum ahead. So better to hold on, but fresh buying should be avoided at least till the Q1 numbers are not put out.
Kickstart with the rapid fire then. Both the gentlemen, you all know what's to be done. Keep your answer as short as possible. Let me go with you, Kunal. First, Pankaj Yadav from Mumbai saying that he has Dhani Services. He's purchased around 200 shares at a price of 180. What should he do?
Exit.
Okay. Avinash, Mahesh Yadav, they have Tata Powers at 175 shares at 207 rupees. Any suggestions on buying more?
Yeah, I think if the view is over the next, I think eye on every business, definitely long-term possibility.
Okay, this one is from Dr. Sudhanshu Chawla from Delhi. He's asking about Poonawalla Finance. Do you think that it has a good fundamentals? He's already holding some shares. Average price 245. Should he average them? What's your take on this one, Avinash?
Yeah, I think he can definitely average. If he has got a 2-year view, then I think this is a well-positioned NBFC. Definitely growth prospects.
Kunal, next query is on JP Power. Rajkumar wants to know, is it the right time to buy JP Power?
I would suggest an avoid or an exit. I think if you're looking to buy the stock, not a good stock to buy. Something from the power names, I think Tata Power or maybe Torrent Power could be better bets.
Right, Kunal, this one also is for you. Rajeshwari from Chennai wants a technical view on Goa Carbon. Can she enter at current market price? And what sort of a target should she look at for the short term? And is it a good buy?
Short term wise, you can look to buy at current levels. 388 could be a target. Stop loss for this trade could be 352.
Okay. Avinash, next query is from Garima, and this one is on Infibeam Avenues. They bought the share at 20 rupees per share. Can they average for a long-term view or exit now?
I think this should be exit.
Okay, this one is for you, Avinash. Zentech, MTAR or Paris? Which of this defense stock is a better play for the long term?
Yeah, I think within the given space, I would believe that MTAR is a better option. They are looking at the next 2 years. It's a great business and it's good to well.
Okay, Kunal, next query is on Vedanta. Sri Ranga has bought Vedanta at 220 rupees per share. Can they add more for a long term?
Not at current levels. Wait for another 5% to 10% kind of a drop and then look to average further.
All right, and with that, we come to the end of the rapid fire. Thank you so much, Kunal, as well as Avinash, for joining us on the show, giving us a take on which of the private sector banks actually lead, as well as resolving our viewer queries. And viewers, we will be back tomorrow to take all of your queries, so do write into us tomorrow at 11 a.m. But for now, we slip into a break on this edition of Buy Now Sell Now, but stay tuned more on the other side. Don't go anywhere.
सब साथ बढ़े. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs
in each